Hi, welcome to the Divorce Allies Circle today. So, since we are having an extra week this month, I thought that I would take it on myself, give everybody a break, and kind of go through what is included in a strategy session. And this could be kind of settlement discussion. I'm probably going to pull up like our property statement spreadsheets, which you could download if you'd like, and also the follow the money spreadsheets, because I think that this will allow you to see what you would anticipate would happen in a strategy session or kind of a settlement offer concept. So if you have any questions, if you want to provide a scenario that you want to take a look at, then we can certainly put some of the numbers in if you'd like. That would be easy. I'll probably be using some sample numbers just of what people typically kind of deal with having to do with the house or business and such like that. So any questions, we can veer off into other discussion points, perfectly fine. But this would just be big picture. And, we typically start off with, what are we experiencing right now in the divorce world? And I will say that for the most part, that that are contacting us are saying we're 6 to 12 months in the process. We are not getting a tremendous amount of work done. I'm having trouble talking to my attorney or my experts, and I just really don't know what's happening, right? There could be delays in the court system. There could be delays in receiving documents. I think that that's typically the biggest thing that a toxic spouse is going to prevent you from having various documentation and such for you to be able to review, especially if there's a business involved. So the more that they can delay by giving you limited documentation, forcing you to get subpoenas for the documentation, are going to be tactics that are used to manipulate the data. And most people will be like, well, somehow we're going to get the documents. And I would say that the court is not always good in forcing somebody to provide you with documents if they really don't want you to see things. So in the Follow the Money guide, we talk a lot about how you find some of these issues and putting them together in the property statement or sort of adjustments. So if there is depleted assets or if there is missing money, how do you use that in order to negotiate a different settlement? So we'll kind of walk through, what you could experience in this process to negotiate a settlement offer. For the most part, people are not putting all of their numbers in a spreadsheet. So I just got off the phone with some clients that are going into mediation today, and they did not up until today, and this is their third mediation, they did not have everything in a spreadsheet. So even if you've been going back and forth on an offer, at the point, and this is where these clients are, they're going to renegotiate the offer in today's mediation because they finally looked at the full financial picture in spreadsheets and could be very well aware that there were some manipulation in the money. Now, most of the time, people are not trying to manipulate the money and hide it from you per se. They're doing things that are avoiding IRS taxes. If they have a business, they're saying that they make less revenue. They're taking money in cash and maybe putting it in another location, or they're building up their business expenses. So we'll kind of talk about, how to incorporate even a preliminary business valuation in all of the property statements or the settlement offer. And a lot of times when you are in a divorce process, you are in a litigation strategy, right? So you're talking to your lawyer, you're talking to your expert witness about what you're going to do in the court system. When you get stalled in the court system, we really encourage you to have an additional settlement strategy. And so a lot of what we're talking about in this group is, what is your settlement strategy? How do you continue to try to negotiate outside of court? And specifically, if you get to the point where you are pro se, or you are underrepresented, which means, maybe you have spent a ton of money on your lawyer and now you're going to try to do this on your own for some period of time. You're going to have more capability of negotiating in mediation and a more level playing field, but in mediation or in making an offer just through email than you will if you are in the court system. The judge and the attorneys are going to want you to abide by the court rules, and the judge is really not there to tell you what those rules are when you're going to these hearings or these status conferences, or settlement updates, things like that. They could be called a lot of different things. So at some point, we usually have clients that have downloaded the spreadsheets and they're like, okay, I've put together some of the data in the spreadsheet, but how do I start to negotiate when there's missing information, there's missing money, there is marital waste, and how do I quantify it? So again, when you hire an expert witness, and what I've been doing for 25 years is offering my services as an expert witness. That means that you are declaring them to the court that they are your expert. They really work for the judge and the trier of fact. And in some states, you could also have a jury trial for a divorce. And at all times, when you communicate with that expert, that could be discoverable. And so your emails to your expert witness could be produced in court. So you want to be real careful what you email them or how you email them. You definitely don't want to say, hey, could you make this number higher or lower? Because that could be admissible in some capacity. So what you're typically looking at when you're meeting with us in going through the Divorce Allies is you're almost working with an outside consultant. And so consultants are not bound by the same discoverable rules or discovery rules as expert witnesses. So when I'm coming in as a consultant and I'm doing things for settlement, that is sometimes privileged information, which means it's confidential. It's not going to be produced in court. A lot of times what you discuss in mediation or in settlement is actually, bound by confidentiality so that it is not discoverable. So those are the benefits of actually hiring somebody as a consultant to do a strategy session. But then what happens? Well, we typically ask people to upload a series of documents, like the past couple years of tax returns, not only for your personal tax returns, but for your business tax returns. We may also want to see payroll information. So a lot of times we're not just splitting the assets, we're also looking at what is the income to each of you. And I'll pull up, we use family law software, so I'll pull up some samples of what that looks like. And we can even test out different states if you guys, want to put in either in a private message or in the chat, you can put in like what your income is, what their income is, what your state is, and I can kind of run those calculations so you can see how it changes in family law software. But a good settlement offer is going to have your financial position, it's going to have your parenting plan, and it's going to have established what you would like for alimony and child support. So income available is going to be typically in payroll statements. A lot of times, if you don't know what the person's salary was, or if they receive bonuses over time, you may want to get the year-end wage statement, right? And their payroll statement. And sometimes you need to subpoena that from their place of employment if they do not provide it to you. But that's going to give a bunch of information about where they deposit their check, if there was any bonuses, restricted stock units, compensation, like stock shares as compensation, or performance stock options, any of those things. It's also going to have how much they paid into like an HSA or a retirement plan, a 401k, if there's a pension or some sort of annuity. So the payroll statements are going to be pretty important, especially in the year end, so that you can see everything that happened in the prior year or the past couple year end. If a person is starting to tank their salary in the divorce, then you're looking at a historical average. And so somebody typically wants to look at what are you currently making, right? Because a normal W-2 wage earner is going to continue to increase over time. But if it's been volatile or they've had different jobs and it's gone up and down, then you might want to look at a 3-year average. But if somebody is just underperforming, the court is going to see through that. So tax returns, wage statements, some bank statements, any of your financial disclosures. Some of this should look like your financial disclosures that you put together with the court. If you've never received the other parties, then they don't want to put in writing what they own because they don't want to be caught in a lie. So that's where you could see that your attorney is also asking for other records through answers to interrogatories or depositions and things like that. But this, again, is a settlement strategy that within the first couple months of you trying to get divorced, that you actually start to put together an offer based on what you have and what you owe. Okay. So let me pull up maybe our standard template. If you guys haven't seen it, we kind of do this every couple of months where we walk through, a scenario, and I can show you how we add in some of those follow the money things that we talk about in guides. Okay. Yeah. And somebody mentioned, getting like these earnings and deduction statements. If you have a small business, that's where I think it's going to get a little bit more difficult, is that you might want to look at the business tax returns. A lot of times people get caught up as in these accounts of like, well, one person has their name on the account and my name isn't listed. Title is not always going to be everything in like marital accounts. So just because somebody's name is on it doesn't mean that it's not going to be split in the divorce. So you really want all of the assets. If they have, if you take your 2 financial disclosures and you merge them, that should be all of your assets and your liabilities. So all of your debts and everything. And then what we're trying to do is split everything on a pro rata basis, kind of, I would say, fairly or evenly, if you will. Okay. So if I'm going to start to show my screen and we can talk through what a sample property statement. So when I'm meeting with somebody for a strategy session, I'm not assuming that they have all of the information. I'm not assuming that you have put together, your settlement spreadsheet, although that will save you some time and you can utilize the 90 minutes in a little bit better fashion. If you're a VIP member in the Divorce Allies, you get an hour each month with one of the allies. And so this could also be an opportunity for you to say, okay, well, I've taken a look at the property statement, but I need some help in talking through some of these scenarios. Okay. So that's typically when I will pull up the spreadsheet and we actually start moving towards it. Like, what state that you're operating in is going to be important. If this is a Missouri divorce, when is your date of marriage could be important. And let's see, 7/21, 7, and then potentially another date that's going to be important is your date of separation, right? So if your date of separation is like 2/1/26, depending upon your state, it may be that you're looking at that particular date at which to separate out all of your assets and your debts. And so in that case, you'll want to produce statements that are at the end of January or close to this date of separation. A lot of states will move it forward and say the date of the property is close to a current trial date, which means you're almost updating it, not on a monthly basis, but you'll update it as you go through. So a lot of times we start with like the real estate, and I'm usually working with one person. There are times that we can work with, and I do encourage, if you have, been introduced to us and you've seen us online or you've joined the Allies and you are going through the divorce process, it could be that you reach out to your spouse and you say, hey, can we work together to have a couple sessions where we walk through this property statement together? Or you put together your thoughts on the property statement. You also pull together their financial disclosure, and then you're putting all of the numbers in here. So in some capacity, you need to know, what the real estate is worth. So this is where you're either going in and both of you have talked about the real estate, you've agreed, it's worth $450,000, or you have determined through Zillow, through a CMA, a desktop appraisal, you've actually hired an appraiser. In these types of situations, I would encourage you to consider hiring one appraisal or appraiser to value the property. Okay. So this spreadsheet is actually available to download online. And we can provide if you're a VIP member, sometimes we'll walk you through this whenever you have your first VIP member session with me. And then we'll give you a copy of it after we've gone through and made some adjustments. So again, if you start with this 450,000, or send me an email, and we can certainly try to provide you with a copy of this disclosure. So you've agreed in some capacity that the value is 450,000. Obviously, if this is one of your major assets, this is going to be an area that you guys are going to try to position it. And, obviously, if you're going to keep an asset, you would want it to be worth less, right? And if you're going to push that asset onto somebody else, you want it to be worth more. So that makes sense if both of you want the property, that you're probably coming up with a reasonable value. But this isn't a place to kind of try to make the number be super high or super low, because at the end of the day, would you take it for that amount, right? Would you keep that property for 450,000, or would you let your spouse keep it for 450,000? So again, pull up Zillow, pull up realtor.com, get a CMA or a desktop appraisal to try to understand what the value is, especially if it's your major asset. If you're working together in this meeting, the strategy session, I would ask you guys, well, what do you think it's worth? Oh, 450. Oh, I think 475. Let's agree on, whatever number. Then you want to get what the current mortgage is, or if you're going as of the date of separation, then it would be what the mortgage is at that particular date. So let's say that we have a current mortgage of about $175,000. So now you can see that if we're splitting things 50-50, then there's net equity of about $275,000 in this particular asset. And if we split it, we would each get $137,500. Sometimes you'll have like a rental property that might be paid off, or, lake house, or something of that nature. So you might have another piece of property on here that either one of you wants to keep, or we have this separate column in case there's an asset like this lake house was always in the husband's family and, was paid off at the time of marriage. But anytime that you have a separate asset, you really are trying to, the burden of proof is going to be on that person to prove that that asset is separate. Now, there are times in certain states where the presumption of that is separate because they clearly show that it was titled in their name, it was held, or bought prior to, in this case, the date of marriage is 7/21/7. So, was the property bought before 2007 and there was no debt on it? Now, what you are trying to prove, if you don't believe that that asset is separate, like if this is a new thing that they brought up during the time of marriage, then you are trying to see, was there any time where you spent marital money on the property? So you did some improvements, during the marriage, and you spent $50,000 on the property. Those are going to be important pieces to look at, is anywhere where a separate asset had a marital contribution. Okay. So in most cases, you need to prove that the asset is separate. In some cases, there might be the burden of proof for you to prove that there was marital contribution to that separate asset. So in each way, either somebody needs to bring the data that says that it was a separate asset, or somebody needs to bring some data and statements that say that we put marital money into that separate asset, right? So if we determine that that was really a separate asset, what happens is you end up putting it over on this separate property. And yes, there's a total of all of this real estate, but realistically, half of it's over here and half of it's over there. Okay. We're going to do the same process for this. Is, you would have car one and a loan, and car two and a loan kind of situation. So I would typically put in the motor vehicle kind of like, Honda Pilot or something like that, and then you're going to put the debt. And it's good to put the debt in at a negative number, but you're going to have the same thing. You might have another vehicle, which is a, Chevy Traverse. You might put the date, 2018, things like that. You would typically, you're going to eventually need like the VIN number. So VIN number and a deed are going to be helpful to have. A lot of times, each state is going to require you to provide some additional information when you're doing your disclosure. So sometimes people put together this property statement before they're even filing for divorce. We have somebody that says the boat and the boat trailer were purchased during the marriage, both parties on loan. He took the boat and sold it later and never gave me my share. Okay, so in a case like that, where you have, you might have a car was sold and what is the value? Okay, so let's go on to here, and we have a $10,000 car, and we have a $2,000 debt. We have an $8,000 car. Oops. And we have no debt. Okay, so we'll usually put like the first car is on the wife's side, the second car is on the husband's side, obviously what car they're going to keep. If a car was sold for, let's say, $15,000 and the person received that money, you can basically, like how this would look is that the car was sold, there was some sort of money that was received. Who received it? Okay, the husband received it, but now, the money is missing. Okay, so you would have like a question of where was this deposited? And you may want to put a footnote at the bottom that asks questions. Some car was sold on a certain date, right? So, what car you might want to put the make and model so that as you're, again, when you're creating this settlement spreadsheet, you're really trying to have it be so that it communicates a story, right? So if this car was sold on this date, where were the funds deposited, right? So you might have questions that during the mediation you want to get answered, or, would be stipulations to the settlement. So again, we have this 15,000. Now for right now, because the husband received that 15,000, we're going to put that as an asset on his side, and he would have to prove that, because in theory, you take that 15,000 and if he put it into a bank account that he hasn't disclosed, then again, then he violated, the law, if you will, whenever he filed his disclosures and didn't say where this money was deposited or this missing bank account. Okay. So, or what is going to happen is in mediation, they're going to show you a statement that he deposited that 15,000 back into your joint account, and then it was used for marital purposes. And then in this case, then we would remove this 15,000 because we've determined where it went. Okay. Somebody says that they tried to act as if the business was separate and they wouldn't disclose any of the info until after I filed a motion to enforce. Still don't have any of his crypto, Coinbase, and digital assets. Yeah. So that is some of the things of whether can you issue a subpoena, where is the crypto held? Is it just in its own storage, or is it being held on like Coinbase or a crypto exchange? So that would be important to know. And then again, if the business is separate, how are they proving that they own the business prior to marriage? and that there was no marital contribution over the time of the marriage. But let's kind of, so we kind of have our property, we have some of our car information. If there's a boat or Harleys or anything like that, you can add those. We'll typically have like a checking account or a savings account. You may have joint, you may have separate, things like that. There could be nominal amounts in here. Again, we will typically see these split 50-50. So you'll be updating these over time. So even usually I'm saying, okay, we're at 330 today. Let's look at last month's statements, because you could all go get those statements. Or if I was meeting with them next week, I would say, okay, let's pull all of the 331 statements and let's have everything be as of that date. So we might go in here and say, okay, this is as of 330. And then again, what needs to be updated and when, right? You might say these are from Kelley Blue Book, as of a certain date when we pulled the information. You may want to provide that information as support in your offer. Okay. So that's a lot of when we would potentially see a position statement. So let me just pull up a position statement example so that you guys can see that as well. So in the divorce position statement, which we're going to have typically with sort of attached, and sometimes this divorce position statement is something that we would provide to the mediator before we go into mediation. Sometimes you're just putting this together for your lawyer, for your team to be all on the same page. But a lot of times, if we have some of these pieces of information, we may want to put Exhibit A is, the deed or the recent mortgage for the real estate. Exhibit B was the car was sold and we don't know where the money went. You may want to put in here various documentation to just show that, yes, we have a preliminary valuation, but we didn't provide it yet, or there's an appraisal for the marital home, but we didn't provide it. So this position statement is going to be sometimes the words behind this settlement offer or this disclosure. So if you're going to split assets, it doesn't totally matter what the value is. It just means that, you're going to equalize this at the time and update it. Household goods and personal goods, we don't always see everybody putting together all of their we don't see people putting together all of their items in their house. So this would be more closer to like collections, collectible items, gold coins, or collections in that kind of situation. You could potentially see artwork or art collections be in here. And a lot of times you're listing them, but you may need a personal property appraiser to come in and take a look. We do have a recommendation for a person that can do that. You may have, baseball cards. You could have jewelry. And again, in some of these situations, you're also looking at, is the jewelry or any of these collections, were they separate? Did they start separate? Was it a gift? Was it an inheritance? And do you have any proof of that? You would also want to provide in some capacity. So, if you just bought new furniture or something like that, if sometimes if somebody moves into an apartment, you bought $10,000 worth of furniture, you might say, okay, well, we just bought that and it's going to be in one person's column, right? And so the more you can get some idea of what the values are for these assets, it's going to be pretty important. Like if you really have $250,000 in an art collection or, baseball cards of some sizable manner, then you may want to get an appraisal for that when you guys are going to keep that in different capacities, right? So it's going to be important to have information on all these assets, especially if you're going to be splitting them in kind of unequal portions, right? Okay. So then we would go into securities, and securities could be anything, stocks, IRAs, things like that. But typically it's like a brokerage account. And so again, sometimes people will say that, they have some sort of, this is after tax, you bought stocks, you are invested in Schwab or something like that. So we might say, Schwab, and then ending, whatever the account number, you might want to list the account number. Typically, you're going to provide a statement. So again, if there's something in there that you believe is separate, a lot of times you can look at the security or the statement and take a look at what, if there's any separate. A lot of times, like stocks that were purchased, they'll have a date of purchase. So is that date prior to 2007? If not, you would get somebody to trace those assets. So you look at what was separate, what was marital, and you would provide some portion that would be separate asset here. Okay, is this spreadsheet something that you would share with the other party or just for us? I think that it is something that you are putting together to eventually share. So one of two things, when we talk about anchor the deal, we're talking about, are you going to make the first offer and put all of the values on here, or are you going to wait for them to make the first offer? A lot of times an offer is going to come over and it's going to look like a divorce position statement. It's going to look at, I'm going to keep this and you're going to keep that. And nobody actually puts it into a formal spreadsheet. When you get to mediation, though, a lot of times people will start to now put it in a spreadsheet, or the mediator starts to do that. A lot of times we would go into mediation and we would have a spreadsheet, but the other side wouldn't. And we start then working off of our spreadsheet and exchanging it back and forth. Okay. So, in some cases, we are sharing that. There is a reason to put everything out there and make sure that nobody's manipulating the numbers, right? Well, like you get the art collection, but we disagree on the value of the art collection. Well, that's going to make an impact on what I'm agreeing to, especially when you're not splitting things down the middle. So a lot of times, if you're going to make this offer a week in advance of mediation, then yes, I would say you're either talking to them big picture in words and sending it on an email, or you're actually sending them the spreadsheet and, you're having questions about the spreadsheet in some capacity. So eventually, yes, I think that this should be used so that everybody's on the same page. Okay, have we listed? I mean, because the first question you would ask to the other side, and I do a lot of joint mediation, so I usually have both people in the room. And I would say, have we put everything on here? Oh no, we still have, some China, or yes, we have the Schwab account, but I also have another brokerage account that I forgot about at, Fidelity, right? So the point of mediation is to disclose all of the assets if you haven't, or if you are working together at the beginning before you've hired lawyers, before you are even progressing down the litigation process, you could put this together and start to work together to get all of the information on here. Insurance policies and annuities. And this is what typically when our first strategy session is going to be like, hey, big picture, even if you guys have been going back and forth and negotiating a settlement offer, like what does this look like? Because I can't see numbers when they're just talked about on a spreadsheet, or like you get that and I get that. That's a prime way to manipulate somebody. And then they're just like, oh yeah, I'll take that asset, but I thought that it was worth something different. Initially, you can provide just the narrative, and I'll show you kind of how I do that at the end of here. And you can kind of see, I will actually go back in and dictate the offer and then use AI to put it together in the words once I get through all of the items. But, it just depends on whether you want to be very clear and upfront from the first moment about what we're valuing these things at, or not. So I think there's benefit in having a central spreadsheet that everybody's working off of, but you could send this over in PDF. Like you don't have to give them the actual spreadsheet so that they can play around with it. We would typically just give it to them in a PDF. We actually never have even provided these spreadsheets in Excel to anybody until, we started selling them about 6 months ago online, and now people can download them and use them for their own purposes. The insurance policies and annuities, again, you would want to list them, but for the most part, if it's a term life insurance policy or something, there's probably not going to be a value. Whereas you might have some other insurance policy. And sometimes we would want to say who the beneficiaries are or what type of situation, but we're looking for cash balance. So that's going to be more important for us to understand what is the cash balance as opposed to, but you also want to list it. Retirement assets are going to be like a 401k plan. And again, what is the most recent value for that? In some cases, we're going to look at what is the after-tax value. And so you can see, if somebody's receiving 401k as opposed to, cash, then this is going to be worth less because eventually they're going to have to pay taxes on it. Okay. So, and it could be, 20%, 15%, whatever that is. I usually look at your prior tax returns and see kind of what your effective rate is. But again, it's just to try to see, what the after tax. Now, a pension is going to be a little bit different. So 401ks are usually going to be where you want quadros. Sometimes IRAs might be in the security standpoint, or you can look at IRAs here. If you have like a Roth, Roth already has taxes taken out. Now the pension, you're going to typically want some additional information for the pension, like what is the payout? Did they have the pension the whole time that they were married? Was there some period of time that they had this pension? And then we would be looking at like a present value calculation for this pension. And so we're typically looking at like what is the monthly retirement benefits? When are they going to start receiving those benefits? How long are they going to receive those benefits? But you can kind of see, depending upon the age of the person, when this is being done, things like that. So again, all of these factors come in to determine a present value of those future payments for the pension. So, are we doing a present value calculation for the pension? Some states, like, is it a separate asset? Is it a marital asset? Is there some portion of it that is separate? Have we been able to prove some of that? Things like that. Sometimes people will say, well, the pension isn't divisible. Like in the state of Missouri, teachers' pensions are not dividable. So in that situation, it would all be a separate asset, or is there some value or benefit? Okay. And this is a state by state basis of whether you can look at the present value of it, or if it's a pension that's going to be split, we might be saying, okay, there's $2,000 worth of income per month, and we're going to need a way to split this, split or something like that. Okay. Same with like an IRA. So in some cases, we might want to have these be uneven splits, but for right now, we have some of the retirement assets in. Okay. And again, it could be that like this IRA is in the wife's name and the 401k is in the husband's name, things like that. Okay. So, okay. So what if he has decimated his 401k by more than 50% and the money is unaccounted for? I'm fairly certain it was funneled into cryptocurrency and other marital waste, but I'm unable to see any proof of it. Okay, so in some capacity, again, let's say there is some sort of marital waste claim. And we may say, like in this case, there was $100,000 of marital waste. Typically what you're getting and so it's one of two things. If there's missing cash, right, or missing cash from retirement, or something like that, and then there's marital waste claims, right? So there's going to be two ways that you're going to look at them, and obviously one way is better than the other. But marital waste, if they were spending money on an outside relationship and you have put it together, this is where, we have the follow the money spreadsheets that come in, and we have some sort of missing money, or we have questionable items, and we have some sort of marital waste, right? And we've added it up because we would have to put something together that would say, okay, you transferred this money, or you took out some cash, or you spent it on flight tickets and things like that. Typically with marital waste, you're going to get about half of it back. So you can go, like, the easiest way to look at it is like maybe they gambled it away. Okay. So if they gambled it, they spent it on cryptocurrency, what you're going to end up getting is about half of this back. So what happens is that what I end up doing is saying, okay, there was an asset of this marital waste of $50,000 that basically they benefited from. Okay. So we're basically saying, hey, you got that $50,000 already and you benefited from it. I want $50,000 in some other capacity. Now, missing cash from a 401k, if you don't know where it is, are you making the assumption that it's actually sitting somewhere? And let's make this 125,000 just so that we don't get it confused. Okay. Now, if it's missing cash from like a 401k and you go back in the 401k and you see it transferred to some account that they have not claimed, right? Then I would want to say that the whole $50,000 is sitting somewhere. And again, you have benefited from it. So I want to put that whole dollar amount on your ledger, right? It's not just you gambled it or you put it in crypto or you depleted it, like in some capacity. So there's a fine line of whether you're claiming that the asset is missing money and that it's sitting somewhere in some bank account that they have hidden, right? So it's still there. They have benefit of the entire amount. Or was it marital waste in that you clearly can see that there was 125,000 there. It is no longer, it's gone. It's been depleted. It's been spent on, an outside relationship. It's been gambled. It's been, drinking or drugs, any of those types of things, right? Big mishandling of money. Then you might only get 50% of that amount. Okay. So I think that becomes a big deal because you can see that you're only going to get 50% of money that's been wasted, but is it really missing? And you think that it's just in an account that is not disclosed, right? Then you're actually trying to get 100% of that. Okay. Now, when we come up for a business, when we're looking at the value of a closely held business, this may be where you have somebody needs to take a look at your K1s or your business income. Then we're coming in and saying, okay, this would be a summary of the tax returns if we needed to look at income available for child support and alimony, right? Let's see where we start this. Okay. And even at this point, you would almost be like summarizing the past several years. So this is where, you would typically see somebody making 150,000 and then they're making 175,000 and then they're making 200,000, right? And even looking back 125. So if all of a sudden they now go back down to 125, what you would be arguing is that they actually could have made a lot more, or what is the average of these 3 time periods. And we would be looking at like this average in some capacity. So this is the average of 2023 to 2025 kind of situation. So this is going to be what we would put together for any of the alimony or child support kind of calculations. If we're going to be looking at the value of a business, we may also be looking at, what has happened in the most recent year. And again, we might have revenue kind of eking up. And you would estimate that it would continue to go in something like this, right? One of the things that we're typically looking for is payments of salaries to the owners. So if there's expenses in here of you can kind of see like, oh, okay, we have that this company made 750,000, then it made 550,000, now it's at 200,000. So that the court is going to recognize that somebody is trying to tank their business, in order to show a lower value. And a lot of times what we're looking at is cash flow. They could be distributing money at the bottom line. And this is what we'll sometimes see, is that they're still distributing money. So distributions are going to be found on the K1 typically. So if you can at least get the K1s, if you don't see the tax return, but this is going to be something that on box 16D is going to be a distribution. So when we're looking at the value of a business, we're looking at, okay, there's cash flow, but has the person paid themselves a reasonable wage? If there was no reasonable wage, then all of this is for the benefit of the company, and we don't have any cash sitting out there for the benefit of alimony and child support. So we may have to make an adjustment here. But, a lot of times people are looking at a multiple of EBITDA, which is cash flow, as the value of this. And it becomes very important for us to know, this average is 500,000 over time. But if we value this based on 3 to 4 to 5 times cash flow, we can see that this is a very different number as opposed to the most recent year. Is the value really 1,600, 600, or in its best year, 2.25 million? So this becomes very important when if we have to add in something for owner's salary. And now we're saying, well, the owner should make 200,000 each year. Let's do this. So now we see that there's no income left over after we pay owner's salary right here. And there still is profit in these kind of years, right? So what if the value is the average? Again, this becomes pretty important because this is just the income approach. So this is how a small business owner could easily manipulate their business by either paying themselves a salary or not paying themselves a salary. And again, it depends on whether it's an S corp, whether it's a partnership, whether they have partners, whether they're 100% owner. Are they paying distributions at the end? Are they taking out all of the salary each year and there's no money left over? Because then when we go in to look at the child support and alimony, we're going to be using this 200,000. And what does it mean to the value of the business, right? So, and again, is it a 3 multiple? Is it a 4 multiple? Is it a 5 multiple? That's all that's going to be taken into account when you're looking at the value of a small business. A lot of times people will have also real estate holding companies that could be, and you would have rents. So you have rents coming in and you have like expenses that are going out. What is the rental income? And can we approximate what the value is based on the rental? Well, sometimes the value of a property could be 10 times what the gross rents are. So if this company is pulling in 200,000 of gross rents, is the property worth $2 million? And, they could still have 150,000 of expenses, but are all of those, expenses reasonable? Because again, you can kind of, if you own multiple properties, is it reasonable that the value of this real estate holding company would be worth $2 million? So again, when we're going back to pull all of this information and we're going back to this closely held business, we might be saying, oh, okay, we looked at the income for the company and we think it's somewhere between 900,000 and 1.6 million. What should we put? Well, do you have a preliminary value? What should we put on there? What if there's also, oopsie. If there's, cash in the business, you have some accounts receivable, but they aren't booked. You have some land, things like that. You have some accounts payable. Like they might only have equity in this business of $50,000, yet we can see that the business could be worth $900,000. So now if we go back into this closely held business, ABC Corp, and we believe, okay, from an income approach, we believe that this business is worth $900,000. And from an equity approach, we believe that the company is worth $50,000. What are we putting as the value? Are we going in there and saying that the value of the, oh, I'm in the wrong one. Dang it. Income and the equity is 50,000. So now are we saying that it's worth the equity? No, we're probably saying it's worth the preliminary business valuation. And now this person, typically the court is going to want one person to keep the company. So now we have this business valuation that the husband is going to keep the company. We can have the wife keep the company, whatever. If in this situation, we have this total business assets and we can see that, wife has some separate assets, husband has some separate assets. Typically this is coming here and kind of being added in some capacity. So this plus this 410, we get to the 2939. Okay. So at some point, yeah. Okay. So now can one person keep the house and remortgage? So the question is, can you assume the mortgage? Well, you're going to need to talk to your mortgage company to determine if you can actually keep this mortgage. If you can, then you may want to make the offer that you keep the house, you keep your car, the other person keeps their car, and they kept that additional money that was sold. You split the bank accounts. You split some collectibles, and then each of you are keeping some various items. You split the brokerage account. Maybe he's determined that there's $50,000 here. Okay, fine. Somebody keeps the term life. Right now, you're still splitting the retirement assets, and then one person keeps the business. Now, in this situation, what this is showing is in order for us to get to a 50-50 split, one person is going to owe the other $440,000. So now can we split the property in a different way? Maybe now one person is taking more of the pension. Maybe they're taking more of the assets. So have we gotten to equality? Nope, we still are off by about 300,000. So can they take all of the retirement assets? We still are in a situation where the husband in this case is going to need to pay the wife $181,000. Why? Primarily because the business is worth so much more than the rest of the assets. So you can see how it's very important for you to know what the true value of the business is and what the true value of the house is before you start negotiating. Because in this circumstance, and again, we're giving credit that this rental property was a separate asset. What if it's not a separate asset? Now this person has $200,000 more of rental assets. They're going to now owe even more to the other side, right? So in this type of situation, we need 281,000 to be paid out. So what does that payout look like in some capacity? And this is where there might be a payout over time. So in order to get 281,000 in 5 years, a person would need to pay about $5,000 over 5 years. So part of your offer may be in order to, have this equalization payment, of $5,000 for 5 years. Mostly people don't want to push it out 5 years. So it might be, okay, what does it look like in 3 years? Right? Okay, well, in 3 years, I would probably have to get $8,000. So you can kind of see where those numbers are getting close to this number. So you might want to offer, okay, pay me $8,000 for 3 years. And this would just be to separate out the this equalization payment based on this property. This is not necessarily also the alimony and child support. So if we come back over to family law software and we say, okay, husband, we could see was making 200,000 from the business. Wife is stay-at-home mom, but the court's probably going to ascribe that she could make 25,000 per year. Let's say we have 3 kids and, husband's going to continue to pay childcare, health insurance for the kids of $500. This is going to have a child support calculation of $27.48 per month. Well, what if there's some alimony payment in some capacity? And you also have that part of the alimony and child support. It depends on your state. So this is specific to Missouri. And then I'll go through some questions because I see you guys have some questions. But like in this situation, if you have a more even split, or, if one of the kids is going to be so that you're splitting custody and, you're receiving some sort of benefit, then this is going to calculate based on receiving alimony of $2,000 the child support would be $1,625, and it is going to also give you like basically the support impact. So you have wife earning income of 2,000, husband earning income of about 16,000, and this is per month, and if they pay child support and alimony, which is about 3,600, then this is getting them to about a 56-45 split. That might be too much. Like a 60-40 split is usually, like a rough guideline, but every state is different. So we might have to go back in and say, okay, what would this support look like? Maybe it's at 1,500. And now you're at more of like a 60-40 split. So again, if you're paying child support and you're paying alimony for a certain time period, because then it matters how long you've been married. And again, it matters if there's a calculator per your state. A lot of times you can change the state in the family law software. And then it's going to print up, potentially like the guideline for your particular state. So this might have like a Form 14, which is for the situation, but you're trying to get an idea of, what that would look like if they received a lot more than 200,000, how does that change? And you're basically trying to figure out, like in this particular situation, this person's going to pay about 1,500 in alimony, 1,700 in child support, in addition to trying to equalize this 281,000. So does that make sense that they could afford that? And would it be reasonable? Because if you're making an offer that's going to be a really bad offer to them, then how are they going to be able to make this payment if you're keeping all of the retirement assets, you're keeping, more of the brokerage account or something, right? Can we get this so that there's less amounts included in here in some capacity? So, or you're selling off some, like maybe the art collection has to be sold off and you guys split the proceeds, so that starts to get us lower. And then so this almost becomes our best case scenario. And then the worst case scenario is, so sometimes I'll kind of save this as, and this again is what we do in the 90 minutes. This is going to be, okay, let's make this, what is our worst case scenario? Well, worst case scenario is going to be all the areas that they're not going to agree to, right? They're not going to agree to this marital waste. They're not going to agree that this cash is missing. They're going to say that this value of this business is only 700,000 and it's all me, or it's separate, right? They're going to say that this house is separate, right? So now you start to look at, you're going to owe them 200,000. So now we go back to splitting some of the 401k or the pension, and you can see this gets us pretty close, right? So again, if you're not running best case, worst case scenario, and the worst case is all the areas that they're going to disagree on value. Like you could even have a worst case scenario that they think that the property is only worth 400,000. Or in this case, realistically, they would say the property is worth more because they want you to keep it and they want it to be worth more on your side, right? Does that make sense? They might say that the jewelry is worth more because it's going to be on your side. But any of these areas you would be looking at, how do you equalize it? Maybe you guys agree that there's, 20,000 of marital waste, right? There's no missing cash because they determined it. So that's where you would have some footnotes about what are you offering for alimony, and sometimes it's called spousal support or child support. And, how long do you need to refinance the mortgage? Talk to your mortgage company. So those would be some of the issues that I see. I'll go back to some of the questions. Somebody bought the Follow the Money last week, managed to get him to cough up his earnings statements. Boat and trailer are purchased. He took the boat. Okay. And the only other thing that I will show you, so when I then make an offer, I go in and just record, wife to keep the primary residence and mortgage and have this amount of time to refinance, rental property will stay with husband. We need the title. We need whatever you want. I kind of dictate it into a Word form because a lot of times your lawyer is going to want to send over this offer in words as opposed to, and keep this property statement as just your own working document. So that would be something that would just be mindful that you would probably put over in the position statement, and have some sort of narrative background or, what your household income is, what the house was appraised for, what some of the retirement accounts. So all of that could be a summary. And then you're telling them what you propose. And then any exhibits that you're bringing to showcase your position. Okay, so let's look at some additional questions that we had. Somebody tried to act as if the business was totally separate. So, again, they need to prove if it's separate. With a federal pension, it's based on the highest 3 years of pay. How do we figure that out? Still have about 10 years until he retires. So what you would be looking at is a pension statement that says what would be the current payout. And so, and you still would then factor it in of that amount of payout today, but it would be paid out in the future at the date of retirement, and then you still present value that to today's date. So the assumption would be, yes, they could earn more in their pension in the future. Somebody said, I need the spreadsheet. I don't think I have that one. They wasted most of everything. We have an auto repaid business. I have an accountant and forensic accountant both looking. I know he brings in a lot of cash. We provide multiple customers and have paid him about $10,000 just in the last 9 months. He's not deposited or accounted for any of it. So, I mean, again, you're looking at historically, what has the revenue been and how has that changed? You might have to subpoena some of the clients. You're looking at 1099s. If clients give them 1099s, or you're looking at bank statements. What have been the deposits on a monthly basis? Do you see that they decline significantly in a certain month, right? So you're wanting to show that the pattern is off. A lot of times in that situation, I'm taking, like, if they're a cash business or an auto, something like that, I'm looking at 2024, the person deposited in January through December certain amounts. Now in 2025, we see those amounts are not the same. Where did the money go? So that takes in cyclical nature of a business. So you're just trying to prove out that they have been tanking the business or doing something um, to negatively affect the cash flow. Okay. He doesn't take a K1. I think he just spends freely, calls everything a business expense. Yeah. So a lot of times then we're adjusting that in the business. But, if they're a solo entrepreneur, those are going to be the hardest lines to determine what is salary and what is just, does the person just take the rest of the remaining income? So if it's 200,000, if it's 300,000, if there's only enough income left in the business to pay them a reasonable salary, then there's nothing left to value. Now, this becomes different when you have, in some of these cases, an insurance company or a wealth manager who the value of that business is also based on revenue. So this is where there could be value to the business, but now is any of it personal goodwill, right? Are they going to say everything is me and there's personal goodwill? And in a lot of states, the personal goodwill is not a divisible asset in the marriage, which means if the value is all to the person and they can prove it, it's all their relationships. There's no way to sell it. And every state looks at professional practices a little bit different, then, and that's where you have a double dip concept. So all of these things you can continue to research and look up, or you can look at other videos that we've created. But all of those become important because are we using all of that income available to pay alimony and child support, or are we using some of the income as the value of the business and then some of it's a salary to the business owner? So, somebody says, I definitely need and want alimony, raise 3 kids, child support for our youngest, but I've not worked outside the home in 22 years. Yeah, they're still going to probably place a salary on you because they're going to say you could at least go out and work minimum wage at 30 hours while your kids are in school. And that usually is going to be somewhere between 25,000 and 35,000, right? So do I place my spouse's separate inherited property on the property statement, even though I am not claiming any ownership to it? Yes, typically, even in your financial disclosures, they're going to want all of your assets. So marital assets, separate assets are going to need to be listed because sometimes the court takes into account, if one person has millions and millions of dollars of separate assets and the other person just has what they're going to receive in the marriage as half of the marital assets, there could be a situation where the judge would give the spouse more of the marital assets because that's all they're getting. It's sort of up to the discretion of the court to determine that. And it would be important for you to ask your attorney, does that normally happen in the court and in the jurisdiction that you're getting divorced in? Because a lot of times that is an option, but does that judge normally do it that way? That's going to be important to understand. And usually they're looking for a wide discrepancy. So that may mean that you get a 60-40 split of the actual assets, right? And if you realize when we're adding in, some of these other items, when we're negotiating things and we're adding in assets that really don't exist, right? That's how we're getting more assets because basically they've received $112,000 worth of assets and we're getting other assets on our side. So, if there was a 60-40 split in this situation, then I'm trying to get 1.6 million and they're getting 1.1 million. So, and a 60-40 split is a pretty significant split, like you would have to have done something pretty bad or depleted assets to a greater extent. If they really had like $500,000 of depleted assets, right? Then, what is, or like if this house were actually 2 million, right? And what was a separate asset, that's going to be more important to understand that somebody's walking away with 2 million in assets, and the court might give you a little bit more here. But any discretion that the court takes to split assets is really a legal discretion. And so that's where you want to talk to your lawyer and say, does that ever happen in this court with this judge? But yes, even if you're not claiming their separate assets, it should typically be listed as the value and who's going to keep it. Okay. Any other questions? We have about 4 minutes left of the session, but that gives you a good picture about what to expect in a strategy session. We can go through the majority of your property in that strategy session. We can sort of make some assumptions about the business value or make some assumptions about marital waste and things like that. But you have to have an idea of some of it going into. That's where a lot of times you'll upload some of your financial documents so that we can take a look at it during the strategy session. And again, if you just have the hour session because you're a VIP member, this is going to be what to expect. So the more you've already looked at the Cali Blue Book, the more you've already pulled together what you think the value of some of these assets are, then we're really trying to come in and take a look at how impactful the business valuation is. So that's where a lot of times I want to know what's the best case and worst case for the value of the business, because that's going to move the needle in a huge amount, right? At what point when time has passed do I need to request updated financial disclosures? So there's usually, everybody will update them at a reasonable time frame. So sometimes 3 or 6 months is when people upload them or update them. But I think you're just wanting to make sure that you keep your side updated and you know what's happening, and you determine if that date of separation is an important date for you. Because if it's a date of separation, then a lot of times anything that's earned after that date is now each person's separate property. So the date of separation may be that you're not updating the financial property statement because it's always going to be at that date. Now, even when you have a date of separation in some states, because the business valuation is still an ongoing concern, then it may be that that value needs to be updated as well. So that's where, it takes them, like right now, we'll start to get clients that have their year-end numbers. We're already 3 months down the road in this year, and now we get 3-month numbers so we can value it as of last year. You don't want to continue updating the business valuation because those are going to be bigger costs to update them over time. So you want to sort of say, like, has anything significantly changed in some capacity, and kind of go from there. So, but you can be continuing to update your side and have all of your statements ready each month, so that when you do the update, they're going to ask for updated statements during that time period, and you'll have it all ready. Okay. Any other questions you guys have? All right. So in general, if you don't have access to that property statement. You can download it in our download to a settlement offer, and that's available on any of our websites. And you can get started on that. Then you can ask questions. Next week, we're going to go back to mindset. And so we'll be talking more with everyone about, how to negotiate some of these items. If you have questions, we can pull it back up. Let's see. How do I calculate my interest in a marital home and an irrevocable trust set before marriage? I'm trying to calculate what to ask for regarding homemaker contribution. Well, that most states are going to have a way to determine what marital portion is of a house. There's usually like a court case that dictates how to calculate it. So look at what that is. A lot of times it's like, what was the value of the house at the date of marriage, and what was the equity in the house, so, and then pro rata going forward, was the equity continue to be paid down? What does that look like? So that is usually still dictated by the state. Okay, so if there was equity at the date of marriage of 200,000 and it was worth a certain amount and they had debt, and now you have a kind of credit for 200,000, you're going to look at current, what is that is increased over time. So it's usually a simple calculation, but it's going to be very state specific. I don't know if I can show you very quickly what I'm talking about, but you might have where, if you, in 2007, you basically bought the house, or the house was worth 250,000, right? And you had 125,000 of debt, or let's even say it's, 200,000 of debt. Okay. So there's about 50,000 of equity. Now the house is worth 500,000 and there's about 150,000 of equity. So you've paid down 50,000, right? But now there's 350,000 worth of equity. You're going to have that a portion of this equity is based off of this $50,000 investment, right? So you're going to look at, there was a $50,000 pay down of the debt. This increased, doubled. So you might have like $100,000 worth of credit in this particular thing, because this doubled, so did this double kind of situation. So you might have, 100,000 of of separate equity, which means 250,000 of marital equity. So again, you're going to have to look at the state that you are in to determine how they look at appreciation and such. Okay. All right. So that is your intro into a divorce strategy session that we primarily on the first session would focus on getting that property statement in a good big picture. And then we would start looking at, can we shore up any of those numbers? Can we shore up, do we have information about what the house was valued at the date of marriage? Do we have any separate assets? Do we have, any updated statements? So I think the more that you can get that all together before you go into mediation and you provide that offer, 7 days in advance of mediation, I can see how then you have somebody coming in to mediation and saying, well, I disagree with your values, or I disagree. And what you're paying attention to is what are the areas that they disagree. When you make an offer before mediation, and then you walk into mediation and they are the other side is there, they should have had 7 days to take a look at your offer, right? You should be coming in and the mediator should be going to them and saying, okay, what is your counter offer? Sometimes they'll even make a counter offer before you go into mediation. I would have your counter ready as well. And that's what we talk about in the divorce strategy session is like, what are the next moves? What are we going to do based on this situation going forward? And you want to go into mediation with your offer outstanding so that they go to the other side and they elicit a counter offer. And the counter offer is going to show you what numbers they agree with and what numbers they disagree with. And you're listening to what the mediator is going to tell you is their issue. And you're writing down, okay, what else, mediator? What else do they have issue with the property statement? Oh, they don't agree with your marital waste. They don't agree with your business valuation. They don't agree with this, that, and the other. During mediation, you're either trying to get documents, you're trying to get what is their position or their counteroffer. What does the mediator think about your offer? What does your lawyer think are the legal issues with your offer? But all of those things should have gone over days in advance so that when you get to mediation, it has forced them to be prepared. The worst thing that you can do is you be hyper prepared and them not be prepared, so that you're going to sit there and wait for an hour for them to discuss your offer. If you give it to them right at the very beginning, they're not going to have time to discuss your offer going into it. And you're just going to sit there and wait and be paying your lawyer to sit there and look at nothing. So during that time period that you're waiting for the other side to give you an offer, start talking about what's your counter move. Where do you think that they're going to come in and lowball you or negotiate? And the gray areas are where they disagree in value or they disagree that it even exists, right? So the more you can understand going into it what those issues are, the more you're prepared for mediation to try to settle it. And again, if you have the capability to have a financial professional or to invite us into the mediation, I think that that's a great idea. Mediators are the people that create the rules around their own mediation. So if you're going into mediation, I would ask them, do you allow a financial representative to be there during mediation? This is where you want a consultant to be there, not necessarily your financial expert. Like they might say, well, you can't have your financial expert there, but you could have your consultant, right? And again, these are just arbitrary rules that any mediator makes up to try to control the process. I don't have those same rules in my mediations. So find a new mediator. If you've gone to mediation and it's failed, find a new mediator, put together an offer in this capacity, and go back and reset the table for the negotiation. So that's what we would call re-anchoring the deal in this process. If you have never put together everything in a financial property statement the way that we put it together, I would do that and understand, is their offer good or not? If they're just offering you, you keep this and I keep that, and you keep this and I keep that, but we're not putting numbers on it, how are you supposed to know if those numbers, those buckets are really even? You're not going to. This is the only way that I know that I can see then very clearly what it is I'm keeping, what it is I'm separating up. And there's a possibility, if you don't have financial experts involved, that your attorneys are just sort of running these numbers and writing them down. And I wouldn't agree to that. I would agree only if I can see all the numbers together. Okay. All right. We've gone a little bit over. Bring your questions for next week is going to be mindset. That's the first week of every month. The second week of every month is going to be the financials again. So if you've had questions about this, if you have questions about follow the money, that's another guide that we brought up those spreadsheets. That's when you think that there's money missing or there's marital waste, that helps you put together those statements. And the proof. What you're really doing is trying to prove out your position. Okay. And that's the position statement. So again, if you have any questions, what's the scene of prenup in India? I'm not sure on that. I think you'd have to check with somebody. That prenups and postnups are legal instruments, and so you'd need to reach out to somebody for that legal piece. All right. So we will see you next time. And if we have a strategy session, or if you want to become a VIP member, go ahead. Who will give alimony in a same-sex marriage? Typically the person that is making more money. So that's going to be a situation for alimony is always a product of who makes more money, and then the state or the country and the rules around how long you've been married. But all of alimony and child support are typically legal issues that look like money issues. So that's why we say pull up family law software, and it can give you some idea, or Google some of the framework in your country or state. So appreciate you. If you want to become a VIP member, you can get an hour with us each month, and that hour can be utilized to go through the property statement and to determine what your settlement offer would be. And then you provide it back to your lawyer. If your lawyer needs to meet and discuss it, then we can certainly set up another strategy session where we go through the full offer with your lawyer and you, and we determine what the settlement strategy is going forward. So we appreciate you, and we will see you soon.